Welcome to another video in the SAP S/4HANA data migration playlist. We are almost done with all the master data migration that we need before we can move on and migrate the transaction data of our GL accounts, so the balances and line items of the GL accounts. We only have the fixed assets remaining. So far we have migrated the GL account master data, the business partners, so the customers and vendors, the profit centers and the cost centers, and also the material master data. You can see all of this in the playlist. So we only have the fixed assets remaining, but for fixed assets there is a small difference that we only have one migration object to migrate both the master data and the transaction data of fixed assets. So before I move on with the fixed asset master data, I want to give you an overview on the data migration of GL account balances and the line items, which is in very simple terms the process of migrating the balances and in some cases the line items of our GL accounts from the legacy system into the new system or our SAP S/4HANA. In some cases, we migrate only the balance sheet accounts. In some other cases, we migrate the balance sheet accounts and the profit and loss accounts. This depends on the transfer date that we use for the data migration and whether this transfer date is at the end of our fiscal year or within our fiscal year. And this is what I will explain in the video today. So I will explain what is the main difference between balance sheet and profit and loss. Why do we need to migrate only balance sheet in some cases, and in other cases we need to migrate balance sheet and the profit and loss accounts? I will also explain what is the meaning of transfer date and what are the different options available, and also what is the meaning of fiscal year and how is it different from the calendar year. I will also show you the accounting entries that are posted when we do the data migration of GL account balances and line items, including the initial balance offsetting account. And I will also explain when do we need to migrate the line items and when do we need to migrate only the balances. This is a very important video. I have always received questions about the process of data migration of GL account balances and line items and the different terms I will talk about today. But I was never able to answer these questions because, as you see, I have to build everything from zero. This is why we have this playlist now, and now I'm able to explain this to you. This process can be very complicated to some SAP consultants and some SAP users, and this is why I'm here. This is what I do. I simplify complicated processes. So I can assure you that after this video, you will completely understand this process and you will be able to explain it to anyone easily without any problems, and also you'll be able to do it in your project. This is enough for the introduction. I cannot wait to explain all of this to you. Now let's start. The data migration process of the GL account line items and the balances is a very long name. So from now on in this video, I'm going to refer to this as the data migration process. So whenever I say the data migration process, I only mean the process of the GL account line items and the balances. The objective of this data migration process is to migrate the balances and in some cases the line items of the different GL accounts from our legacy system into the new system. In some cases, we migrate only the GL accounts in our balance sheet, and in some other cases, we migrate the GL accounts in our balance sheet and also the GL accounts in our profit and loss. So now let's review quickly together the difference between balance sheet and profit and loss statement. Maybe you already have experience about this, maybe you don't have a lot of experience in accounting, but anyway, I will just give you a quick revision so we can all get into the mindset of this video. Balance sheet and the profit and loss or income statement are the two main financial statements we have in accounting. The structure of balance sheet is, on the left side, we have assets, and on the right side, we have liabilities and owner's equity. In assets, for example, we can have accounts such as fixed assets, so lands, equipment, buildings, and so on. And we can also have cash and the banks and the accounts receivable, so the customer accounts. On the liability side, for example, we can have loans and accounts payable, the vendor accounts. And in equity, we can have, for example, the shareholders' equity and retained earnings. We will talk more about retained earnings in this video. The balance sheet financial statement is generated at the end of every fiscal year. And there is a golden rule in finance that at the end of any fiscal year, assets must always equal liabilities plus owner's equity. This is why it's called the balance sheet, because on the left side we have assets, on the right side we have liabilities and owner's equity, and at the end of any fiscal year, these two sides must be equal. If they are not equal, then something is wrong in our accounting system. A very important characteristic of the GL accounts that are in our balance sheet is that the balances of these GL accounts move from one year to the other. So for example, at the end of the year 2023, If I ask you what is the balance of our bank account, and you check the balance sheet and the balance of our bank account is 1 million USD. Then in the first day of the new year, in 2024, I ask you what is the balance of our bank account. It will still be 1 million USD. We still have 1 million in our bank. So this is the balance of our bank GL account that moved from 2023 to 2024. This is a very important characteristic that you need to keep in mind. So for assets, liabilities, and owner's equity, the balances move from one year to the other. Now let's talk about profit and loss or income statement. So income statement includes our revenues and our expenses. So we have revenues minus expenses equal net income. This is in a very simple way. There are a lot of details in the profit and loss, but this is the basic concept. So we have revenues minus expenses equal net income. Now, if I ask you at the end of the year, what is our sales revenue? You can easily say, for example, our sales revenue for the year 2023 is 500 USD. Now, when we move to 2024, in the first day of the year, if I ask you, what is our sales revenue in 2024? You will tell me our sales revenue is 0. So this is one of the main differences between P&L and balance sheet. Profit and loss accounts lose their balances at the end of every fiscal year. So what happens to this balance? So now we are at the end of the year 2023. We check our profit and loss and we find that we have revenues of 500 USD and we have total expenses of 300 USD. So we have a net income of 200 USD, for example. We take this net income, so the balance of our profit and loss, and we move it to the balance sheet under the retained earnings account. So the retained earnings GL account is the link between our profit and loss and our balance sheet. So now, if we are doing the data migration process of GL account line items and balances at the end of our fiscal year, so for example at the end of 2023, are we going to migrate only the balance sheet accounts or also the profit and loss accounts? You should already know the answer to this question. If we are at the end of the fiscal year, this means that we already settled all the balance in our profit and loss to the retained earnings account in balance sheet. So this means the balance of our profit and loss accounts is 0, so there is nothing to migrate for profit and loss. We are only going to migrate our balance sheet accounts. While if we do the data migration at any period within the fiscal year, in this case, we still have balances in our profit and loss. We have not settled anything yet to retained earnings. So in this case, we need to migrate both the balance sheet and also the profit and loss accounts. See how simple this is? So if we are migrating the balances at the end of our fiscal year, we only migrate the balance sheet because we don't have any balances in profit and loss. And if we are doing the migration at the middle of the fiscal year, so any period within the fiscal year, then we need to migrate both the balance sheet and the profit and loss. Now you need to pay very good attention to the term fiscal year. All what I explained so far was related to the fiscal year. So we do the migration at the end of a fiscal year or within a fiscal year. So what is the meaning of a fiscal year? It means an accounting year or a financial year. And this can be completely different from the calendar year. This is very important. So for example, a calendar year is what we use in our calendars. It starts from 1st of January until 31st of December. And in most of the cases, you will find that the fiscal year or the financial year is exactly similar to our calendar year. So it starts also from 1st of January until end of December. But it is very common in many countries to find fiscal years that start from beginning of July, so 1st of July until end of June. So the fiscal year goes from 1st of July to 2023, for example, until 30 June 2024. So when we say we are doing the data migration at the end of the fiscal year, in this case, we mean that we do the data migration in 30 June 2023 or in 30 June 2024. So all what we are talking about is related to the fiscal year, not the calendar year. In many cases, you will find that the fiscal year is different from the calendar year. I have even done projects in companies that have fiscal years that change every year. So for example, they have 13 periods or 13 months in their fiscal year. So for example, this year, we are starting our fiscal year from 1st of January, but it goes until end of January of the next year. So from 1st of January 2023, and the year will end, for example, in 20 of January 2024. And then the new year after this will start from 21 January 2024, and will go until 10 of February 2025. So you see how the dates of the beginning and the ending of the year change every year. This can be very confusing to everyone, but you need to understand that calendar years are different from fiscal years or financial or accounting years. Now let's get back to the previous point. So if we do the data migration of the GL account balances and line items at the end of the fiscal year, we only migrate balance sheets. While if we do the data migration any period within the fiscal year, then we migrate both balance sheet and profit and loss. The date that we choose in order to do the data migration is called the transfer date. This is a very important date because it tells the system that the balances and the line items that we are migrating are until this date, at this exact point of time. So if we are doing the migration at the end of the year in 2023, so for example in 31st December 2023, then our transfer date is 31st December 2023. Don't make the mistake of putting the day that is after. We don't do this. So the transfer date is the day at which, at this exact point of time, we are transferring the balances of this point. So we check our balance sheet in the legacy system and we find that at this exact date we have these balances, and then we migrate these balances into our new system. This goes for both profit and loss and balance sheet. And then here there is a very important control point for data migration, that we check our financial statements in the legacy system. So we generate a balance sheet and a profit and loss statement in our legacy system and we check the numbers. And then after the migration to the new system, we generate the same financial statements in the new system in SAP S/4HANA. So we generate another balance sheet and profit and loss statement, and we compare the numbers. If there is any difference in the numbers between the statements here in the legacy system and the statements in the new system, then something happened wrong in the data migration, and this can take a lot of time to troubleshoot. So this is a very important control point to compare the financial statements. Now we understand the main difference between balance sheet and profit and loss. When do we need to migrate balance sheet only, and when do we need to migrate balance sheet and profit and loss? What is the meaning of transfer date, and what is the difference between a fiscal year and a calendar year? Now let's move on to the accounting entries that happen when we do the data migration. Now let's go and look into our balance sheet. And first I will take the simple scenario that we are doing the data migration at the end of our fiscal year. So we are only going to migrate balance sheet accounts. Now let's look into our balance sheet. On the left side we have assets, and on the right side we have liabilities and owner's equity. The left side is debit, the right side is credit. These are basic accounting concepts. I will not go further into these very basic concepts because some of the audience of this video can actually find this very annoying and boring. So I'll just go ahead with data migration. But if you want me to explain more into the basic concepts of accounting, please let me know so in the comments, and I will see if I can create a playlist explaining accounting. This is not something that I have done so far, but I really love accounting and I wouldn't mind explaining it. So now let's go back to data migration. So on the left side we have assets, these are debit. So for any asset account, when we do the data migration, the accounting entry will be a debit to the asset account. So for example, debit to cash, debit to banks, debit to lands, buildings, debit to accounts receivables. And on the credit side, we will have an account that we create for data migration that we call the initial balance offsetting account. And this account we define in our data migration process. So the entry will be debit to asset, credit to offsetting account. Now for the accounts on the other side, on liabilities and owner's equity, we will have a credit to these accounts. So credit to vendors, credit to loans, credit to liability account, and credit to stockholders equity and any other account we have in equity. So returned earnings is also credit. And the debit will be to the initial balance offsetting account. And since we are doing the migration at the end of the fiscal year, we can follow the golden accounting rule. Assets equal liabilities plus owner's equity. So the offsetting account that we use against assets will equal the offsetting accounts that we use against liabilities and owner's equity. So for assets, we have credit in the offsetting account. For liabilities and owner's equity, we have debit for the offsetting account. These two have the same value, so the net balance of our offsetting accounts is 0. This is a very important control point. The clearing or offsetting accounts for the initial balance must always have 0 balance in total. We can use only one offsetting account or we can use multiple. In most of the cases, we use multiple. So if there is any value that's remaining, we can easily analyze. So for example, we use one offsetting account for customers, one offsetting account for vendors, one offsetting account for assets, and so on. At the level of every offsetting account, we can have some balance, but the total of all the offsetting accounts must have a balance of 0. So if we generate a report and we extract the balances of all our offsetting accounts, we must have a balance of 0. If we have a balance there, this means that something went wrong in our migration process. Now let's talk about the more complicated case, that we are doing the data migration within the fiscal year. In this case, we still have balances in our profit and loss, and we have not yet moved these balances to our retained earnings in the balance sheet, because we can only do this at the end of the fiscal year. So we need to migrate our balance sheet, and here the entries will be exactly the same as the first case, but here there is a very important note. The retained earnings account have not yet been updated with the balance that we have in our profit and loss, which means that assets are not equal to liabilities and owner's equity. Actually, assets are equal to liabilities and owner's equity plus any balance that still is in profit and loss. So any balance that we have in our profit and loss statement. So in this case, we migrate our balance sheet normally, but after migration of the balance sheet GL accounts, we will find that we still have a balance in our offsetting account, because assets is higher than liabilities and owner's equity. And when we migrate assets, we post a credit to the offsetting account. So if we look into the offsetting accounts, we will find that we have a credit balance. Then we migrate our profit and loss accounts. And here it is very similar to balance sheet. So we have expense and revenue accounts. For expenses, they have a debit nature. So the entries will be a debit to the expense account and a credit to the initial balance offsetting accounts. And for revenues, they have a credit nature. So the entry will be credit to revenues and the debit to the initial balance offsetting accounts. And then there will be a difference between these two initial balance offsetting accounts, because revenues are not equal to expenses. This is our profit and loss. And the balance that we have in the initial balance offsetting accounts for profit and loss will be equal to the balance that's remaining in the offsetting account from balance sheet. Now you see that the offsetting accounts from both the balance sheet and profit and loss will have a balance of 0. So we still have our control point. It is very important that the total balance of all our offsetting accounts equal to 0. And this is it for the accounting entries. I only have one more point to add in this video, which is when do we migrate line items and when do we migrate balances? Actually, this depends on the business requirement, but let me give you the most common requirements. So for example, for the bank accounts, the bank account has a balance of 200,000, for example. The 200,000 is a result of multiple line items of debits and credits, so deposits and withdrawals that happened to this bank account that resulted in the balance of 200,000. Now, when we do the migration to SAP S/4HANA to the new system, we actually don't care a lot about what is the history that caused this balance. We only want to see the balance in our SAP S/4HANA. In this case, we only migrate the balance of our bank GL account. If in your business scenario with your customer or with your company, you would like to see in SAP S/4HANA the details of the different line items that led into the balance of the bank account, then in this case you can migrate the line items. But most of the time for bank accounts, we only migrate balances. On the other hand, for example, if we take accounts receivable, then we always have to migrate line items, because the accounts receivable balance is a result of multiple customer invoices that have been posted into accounts receivable, and we want to have the history of all these different invoices in SAP S/4HANA with the different due dates so we can clear them later. And also most of the time we link them to the sales orders, so we also migrate the sales orders and the material documents into SAP S/4HANA so we can have a full history of the sales order, the goods issue, the delivery that led into the invoice, and then the line item in the accounts receivable. So for accounts receivables, we always migrate line items. Same for accounts payables. And we should always try to minimize the number of line items that we migrate, because this increases the workload and also leads to many mistakes. So whenever there is no need to see the history in the new system, we should only migrate the balances. We only migrate the line items if it is really necessary to see the history in SAP S/4HANA. I know this video includes a lot of information, but I'm sure you will be able to understand everything that I explained today. I have my notes here and I can see that I have covered everything that I have promised you to cover at the beginning of the video. So I have explained the difference between balance sheet and profit and loss. When do we migrate balance sheet only? When do we migrate balance sheet, profit and loss? What is the meaning of a transfer date? What is the fiscal year and how is it different from the calendar year? And also, this is everything. What is the retained earnings and how does it link balance sheet and profit and loss? And also when do we need to migrate line items and when do we need to migrate balances? and the difference between migration at the end of the fiscal year and in the middle of the fiscal year. I have enjoyed a lot creating this video, and I hope that you also enjoyed watching it. I know this is one of my favorite videos on the channel, and I hope that it receives the attention it deserves. Don't forget to leave me your comments. Let me know if you want to know more about accounting or anything else you want to know about the information I explained in this video. Leave me your comments. Let me know if you find this video useful. Subscribe to the channel, share the video with your connections, share it on LinkedIn, on Facebook, everywhere. Also, if you would like to support the channel, you can check the channel membership program. I will leave you a link here. Don't forget to check the other videos in the playlist and also check the other playlists available on the channel. And I will see you again in the next video, where I will demonstrate how to migrate the master data and the transactional data for fixed assets. Thank you for watching, and I'll see you again soon.